Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning market webcast. Okay, we've engaged the band ride a couple days in a row. That starts a lower band ride. So you got your 29.61 quarter high. You had your 94 lower high from May the 16th, and you're just seeing this gradual lower highs and lower lows since they could not hold the 100-day on the 24th. It's pretty much been a bleed, a little bit of an inside day here, and then a bleed. So they've converted the 50, the 100, and now the 200-day exponential moving averages. This really starts to open up things like 27.16, which is a 38% retrace from the Christmas low to the 29.61 quarter high. That becomes very interesting to me if we can get back down and convert, say, 27.30. Your Globex low from last night was 27.31.25. We were short heading into the close on Friday. We had taken some profits. We were up about 10 handles, and so we left it on for the weekend. The gap down was great for us. We covered this morning. We let it bounce up a little bit because it was the last trade in what was a really, really good month for us. So we ended up taking 20 handle runners on a 30-something handle trade. So it was a nice way to end the month. And now, here comes June. And there's really no indication to me that it's going to be any less volatile than May. There are no unknowns that have become known. You have all kinds of different cross currents and headlines and a variety of things going on that are going to test this market, in my opinion, and create volatility. So off we go into June. Hourly chart, you can see the weekly pivot resistance that was created last week. Your new weekly pivot is at 27.81 quarter. Hourly midband has been a good area to be tested and a good area to hold for the bears. You can see the gap. I wouldn't be surprised if we totally filled the gap. That would take a 50 print. We've done as much as 47 quarters, so we're in the gap. We just need to, we'll see if it converts. If it does, then 50's got to hold. It's got to push back below the hourly midband. And, the bears can't take the day off. If they do, the most they can do is allow it to migrate back up to the weekly pivot. And if it gets there, they've really got to reject it. They've got to hold it like they held it last week and push it back to the downside. But getting back to the point I made a minute ago, going from 44 to 81 and rejecting back, that's volatility. And that's a fantastic trading tape. Fantastic trading tape. So for the open today, you've got volume weighted average price, VWAP stands 39.5. Our proprietary moving average is pretty much locked up with the hourly midband at 43 to 43.5. So call it 40 to 44, bull bear zone. I want to be short below that. I want to be long above. I want to keep my eye on the Globex low for a potential break or potential support. Keep my eye on both the daily pivot, comes in here, 64 and change. And then, if they really just ramp it, maybe not today, tomorrow, Wednesday, whenever, if they get there, when they get there, if and when it happens, 81 will be a big deal. All right, take care, everybody. Trade them well. More stuff out on social. Check that out. Come check out the room. Tons of new trials, tons of new people converting to paid stuff because they like what they see. And it's just it's a nice place to learn how to trade this stuff with a bunch of people that it's a comfortable place. It's a place where you can ask questions. It's it's something that we're all very proud of. So if you're interested in this stuff, come check us out. Take care, trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.